Hi guys, welcome back to our YouTube channel, AlgoWise. In the last three videos, we discussed mainly about macroeconomics, its basics, the terms which are most important, and we also discussed about the US inflation data, which was released on 13th of July, and what numbers had come true, and that was explained in pretty much detail by Pratik. So all people who have missed those videos, you can just check out the description box. The links are already there in today's video. Now, for today's video, we'll be discussing more in detail about how those numbers have factored into the markets currently, and what's the direction of the US markets as well as Indian markets in general. So let's hear it from Pratik. Welcome, Pratik.
Hi, Kalyan. Thank you. So basically, if you look at the current market situation, the dynamics are slowly changing, basically. So last time we had discussed that we need to pause at this point of time. Nobody should sell, nobody should buy, but people should pause and try to take a look at what is happening in the market and what are the data points that are basically coming in. Because inflation is just one data point that basically comes in. But when you think about the meeting of FOMC, that is the Federal Reserve's meeting in the US, which is one of the important things that is driving a lot of global things at this point. So the direction of the meeting would also be dependent on other economic data that is going to come after the inflation data, right? So on Friday, in fact, one of the Fed speakers came and said that we are not just looking at inflation data, but we are looking at other data points also. So because of that, the market started believing that the rate hike that will happen on 27th of July is probably going to be 75 basis point instead of 100 basis point. So the initial expectation before the inflation meeting was 75 basis point. Then immediately after that inflation data, everybody started expecting that that inflation, the Fed rate hike will be 100 basis point. So there was huge gyrations in that market. I will show you that specific market also, so that you get an understanding how it happens.
Okay.
If you look at this target probabilities, right? These are the probabilities for July 27th meeting. So this basically is 75 basis point hike, which is 0.75%. This is 100 basis point hike. So at one point of time, the 100 basis point probability went up to 80-90%, around that range. Right now it is down to 33%. Right. So market participants are now expecting a 75 basis point hike, and that is more likely to happen at this point of time, in my view. But again, what has changed? Why did the market, this specific market of Fed rate probability gyrate this much? That is something that we need to understand. So if you look at the economic calendar, right? So if you see that inflation data, this was the inflation data that came in on July 13th. After that, a lot of data points came in, which were important. For example, we had continuing jobless claims and jobless claims, which came in, which was a little higher than expected. It was almost as expected, but it was trending on the upward side. This jobless claims basically means that how many people are filing for new unemployment benefits. US has an unemployment benefit scheme where if people file for jobless claims, they get some money from the government, right?
So just a quick question here. So will this jobless claim data, it will impact negatively, right? If the numbers are more. So if the number is more than expected, it would mean that a lot of people, the number of people who are claiming that amount is high. So that will impact the market negatively, right?
Well, the market works very strangely, Kalyan. So what happens is negative news is positive news at this point of time. The reason is that if there is more negative news coming from the economy, that the Fed will slow down rate hikes. So market works on future expectation. Market doesn't work on current scenario, right? So if the future expectation is that Fed will hike lesser, then it's positive for the market, because the market sentiments will improve and then economy will also improve. So, from that point. So that way, negative news right now is actually positive news in the market.
Okay.
So
this is different.
And similarly, Yeah, this is different. Sometimes positive news is positive news, but at times negative news is also positive news, and
Okay.
sometimes positive news is negative news. So it's very strange in the market.
Okay.
So if you see, retail sales was higher than expected, which means that consumer is still spending. Retail sales is what, like people go into shops and buy things, people go and do different sorts of shopping, right?
Shopping. Yeah.
So those
Correct.
are all retail sales number. So retail sales are still increasing, which is sort of a positive thing. Uh, but at the same time, if you look at the housing market index, which basically came in on July 18, Monday, that is yesterday, it was lower than expected. The consensus was 65, it came in at 55. Similarly, the building permits, which means how many people are getting permits to build houses, or what is the housing starts, how many constructions have started. So those numbers were sort of lower than the previous numbers, at least. And the previous number itself was quite low. Like if you look at the previous number in May, it was down 11%. From that number in June, it is still down 2%, basically, right? So the housing starts and building permits are sort of going down. It's trending on the downward side, which is, generally speaking, it's a negative thing, right? That
Yeah, because
less
fewer
number of,
houses are getting built, or maybe fewer permits are being issued for new houses to be built. So basically, that demand has subdued. So something of that sort we can interpret, right?
yeah, because demand has gone down. Because of that, the supply is also coming down, basically.
Okay.
So that is how you can interpret. That is normally a negative thing, but it's a positive thing for the market. Why? Because if you already have signs of economy slowing down, then the Fed will be less aggressive in hiking rates.
Correct. Correct. Yes.
So if you look at this economic data, because of these economic data and what I spoke about, the Fed coming on Friday and saying that we are probably going to look at other data points also, right? So from that point, if you see the market, the US market specifically is actually going up. This is the US E-mini S&P 500. S&P 500 is list of 500 stocks that you have, right? So if you look at, let's say, last 3 months of data, this one candlestick is one day,
So this is a
basically.
daily chart.
So this is when the inflation came out. Daily chart, yes. So this is when the inflation came out, 713. Then market went down. Then Fed came and started speaking about other things. So then market went up. Then market is constantly going up. Even yesterday, if you see, negative data came in. That is why the market went up substantially.
Okay. Okay.
You see, negative data is coming in. That's why market will go up. So it is kind of, this was pretty widely watched indicator, is basically that what is going to be the building permit and housing
Okay.
starts. It is generally not a very important indicator, but now, given the context that Fed is looking at this very closely to think about rate hikes and future direction of policy, because of that, it became pretty important, and the market reacted quite significantly because of this.
Okay.
And again, from the perspective of Indian markets, there are multiple things which are important. So one thing that is definitely very important is going to be the inflation, because the RBI rate policy, the Indian Central Bank's rate policy, will be dependent on the trajectory of inflation, right? Now, if you look at the trajectory of inflation, it is sort of coming down from 7.79%. It has come down to 7.01%. This is the CPI number, the Consumer
Okay.
Price Index number,
Okay.
right? So the trajectory, if you see, it's basically on the downward trend. And if you look at the rates, it has already gone up from 4% repo rate to 4.9% repo rate in the last couple of months.
Yeah,
So the
90 basis
next
point
policy,
increase, right, in the last two sessions.
exactly. Yes, exactly. So we had 90 basis point increase. So the next policy date is kind of, I think, 4th of July. Let me take a look at this. So if you look at the next month, yeah, look at this. 4th
Yeah,
of
it's
August is
4th
when
of
the
August, correct.
4th of August. So the general expectation is that there can be a rate hike of 50 basis point.
50 basis points, okay.
But again, given that inflation is coming down and it's in the right trajectory. Basically, RBI may or may not hike rates, or even if it hikes sometime, it is possible that the rate hike will be lower, maybe 25 basis point or
25
so.
basis points. Okay. Mm.
Right. So if that happens, definitely, I mean, that is an expectation that will already be built into the market. It's not that something will happen after that market will react. It's that market before going into that event, like on August 4th, before that, if the market may be expecting that we are going slow on the rate hikes. If market is already expecting that, market will factor that in and market will start going.
Correct.
So
Correct.
it's like,
Yes.
what is factoring in? Factoring in basically means that market already has some method of saying that, this is what is going to happen. So let's say market has already factored in all the negative news, which is there will be a recession in the US, there is a lot of problems in the eurozone economy. Those kind of things are already factored in. Now, if market gets incrementally positive news, let's say the positive news is that no, US will have a growth slowdown, but there will be no recession, then market will automatically go up, right? So that is
Correct.
how the
Correct.
factoring in thing works basically.
Yes.
So when I say something is factored in, that means the negative news or the positive news is already factored in.
Or yeah.
Now
Correct.
we have to either get more negative news for market to go down further, or if the negative news goes lower, then the market will go up.
Okay. Okay.
So that's how you can see, right? From Indian perspective, again, if you look at the currency, Indian currency, right? This is the chart of USD by INR. So
USD.
one
Okay.
USD is equal to X INRs, right? So this is how it looks. Now, if you see this, it has basically from the beginning of the year, it has come from 75 to 79 or 80 kind of levels, which is sort of okay. Because if you look at other currencies, let's say if you look at something like euro, if you look at Brazilian currency, if you look at all other emerging market currency or even developed currencies like
Or maybe if you
JPY.
compare Japanese yen with USD, that has like depreciated more than 15%. So
Yes, exactly.
So
So if you
rupee is
look at
actually
all this,
performing well if you compare it with euro or GBP or Japanese yen as compared to the what they have performed against the dollar. So it's a rupee, the depreciation is slow kind of, and if you compare it with other currencies, so their performance with the dollar, so rupee is performing well against the dollar.
exactly. If you look at the euro, it has depreciated more than 12-13% from the starting of the year,
Yeah,
while
correct.
rupee has depreciated less than that. So a
Yeah.
lot of currencies have performed way worse than the rupee.
Yes. Yes.
And because of the US rate hikes and the expectation of fast rate hikes, the US dollar has been appreciating. In this kind of environment, emerging market currencies generally have a problem. So countries like India, Brazil, Turkey, all these countries face some problem. But because the Indian inflation is sort of not in that trajectory, Indian inflation is kind of fine. At the same time, the government finances are also fine. We are having sufficient amount of reserves from the perspective of external reserves, as well as sufficient amount of tax is being generated in the economy. Because of that, the Indian economy is generally on a stronger footing. Even if you look at the Indian markets did not fall as much as the S&P. Indian
Yeah,
markets
correct.
did not
Correct.
fall even
Yes.
20%, while the S&P fell more than 20%, right?
Correct.
So generally speaking, Indian market is on a stronger footing compared to other countries, let's say. So from that perspective, one may actually go and start taking good positions into the Indian markets.
Okay.
And also, if you think about the FII data, the FIIs have started buying. For many months, FIIs have been net sellers.
Yeah,
But
net
for the
sellers.
last
Correct.
couple of,
Yes. Yes.
yeah, so
I
I
think
mean, just
some
for,
29 billion or something they had sold in the past month. I'm not sure of the numbers, but something it was quite a big number. The sell off total from the foreign
yes,
institutional
yes,
investors.
it was a huge sell-off basically. On
Yeah.
everyday basis, they were selling. Like
Correct.
in
Correct. Yes.
Indian currency, 1,000 crores, 2,000 crores numbers were very frequent to see. But now that tide has turned, and for the last 3 sessions or 2 sessions, basically FIIs have started buying, which is a
Okay.
positive indicator, because our domestic institutions normally keep buying. Retail are also people who keep buying basically, and the economy is generally on a stronger footing given that we have got a lot of GST collections. GST collections are at all-time highs,
Correct.
which indicates that economy is actually doing well because government has not suddenly increased taxes, but GST collections are pretty high, significantly high compared to last year.
Okay. 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 Okay.
So I think generally speaking, the economy is probably going to do fine. There will be a growth slowdown in the US that you may encounter, which basically will mean that maybe inflation will remain for some time, but it will slow down, will eventually slow down. Growth will also slow down because growth is generated from a lot of different factors. Like you have to have people who are spending, you will also have to have demography which is sort of growing, population has to grow, a lot of factors are there. We can discuss about that sometime later, but given different confluence of factors, the US economy may have a slower growth. Europe may have some problems, I mean much slower growth basically, which is already happening for a decade or so. But Indian economy is probably going to be on a stronger footing, and we'll probably have an Indian market outperformance also compared to other markets.
Okay. 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 So, fine, I think, Pratik. So, let's stop it here today. And what we can do, we can have one more, and we can also discuss the factors which you told just now about, the demographics and the factors which are like the bigger factors, if you see, impacting the immigration and a lot of other things which are shortage of labor and all those things which are actually impacting the US economy. So we can have a separate video for that,
Sure.
as well as we can have a one more continuation video of the same session, maybe see how the markets perform after a few days, after a few trading sessions, and then we would be actually able to tell whether it has stabilized, whether it's range bound, or whether it's going to go up. So we can have
Sure,
one more
sure.
session on
And
it.
one more interesting point would be looking at the Japanese data basically, because Japan
Okay.
is in a very, very different situation. So I can also explain about Japan.
Okay, sure, sure, sure. I think in the next video we can include that as well. Fine.
Okay, sure, sure, Kalyan.
Yeah, yeah. So thanks, Pratik, for joining. We'll catch up in the next video. Yeah.
Sure. Thank you, Kalyan.
Okay. Yeah. Thanks. Bye.
Bye.